Hey, ladies and gentlemen, happy Monday. Let's take a look at the market. The market today has a huge divergence going on. The obviously the Dow Jones has massively outperformed all the other index. You can see that Dow Jones actually made a new all-time high. It was able to break above this level, the previous high. And again, the Dow Jones has been a lagger since March, so now it has broken out. It doesn't mean the overall market is strong. It's just the Dow components, due to the vaccine news from vaccine. These Dow components are obviously the what I call the real economy, and they would benefit greatly from the vaccine, right? From a successful vaccine deployment. But in my opinion, the vaccine are not going to be ready, or it's not going to be massive. It's not going to be available at a large scale until next August. By March, I believe we're going to have some vaccine that's coming out in the market. But to get the vaccine to a lot of people at a planetary scale, I think we have to wait all the way until later next year. I'm talking about the earliest August. So right now, this news, I think it's just a pump and dump, in my opinion. So let's going back to my previous hypotheses of the 2004 scenario, where we went back to history and we look at the stock market in 2004. And you can see that here. This is 2004 stock market where we came from a bottom, the dot-com bubble bottom, and we rallied up by almost 90% in about a year. And we started to consolidate at the level, and then we had this kind of shakeout. So this shakeout only lasted for about 41 days. It's a very short shakeout if you look at from grand scale of things, right? But this 41 days, the shakeout, the reaction from individual stocks are not equal actually. Although it looks like a small shakeout on the index level, a lot of high-flying stocks during that time actually had a more than 50% correction during that shakeout. One example is NVIDIA, and there are actually a lot more, several stocks like that, but NVIDIA is one of it that it really left a huge impression on me, how that shakeout came to be. And you can see that here. Let me just compare this with the index again. You can see that the index basically, came from the bottom. NVIDIA was going up, and at the second kind of attempt to break the all-time high, not the all-time high, but previous high, NVIDIA kind of topped out, and the third time the index trying to break high, NVIDIA actually decoupled from the index. You can see that here, and then start going down. You can see that here. Then NVIDIA basically made this huge correction compared to the index, and there are actually several other stocks like that during that time, and they are mostly technology stocks with high valuation, and you can see that NVIDIA went down by 65%. And today, it seems that this phenomenon is actually happening again in this market, where the index didn't really move that much, but actually the index is up today, right? And what happened was individual high-flying stocks with high price-to-sales ratio, like a lot of tech stocks that benefit from coronavirus, they are the Rona stocks. They have gone down dramatically, right, today. So let's take a look at some examples, right? For example, obviously one of the biggest examples, Zoom, right? If you look at Zoom, if I compare this with the NDX, you can see that on the third attempt, Zoom actually decoupled from this particular market move. And this is exactly what really happened to NVIDIA. And we can look at the Peloton Interactive. Again, the market is not, you know, made a attempt to the new high, but the Peloton actually diverged from the market, from the index, right? And also, you know, BYND, same story. All these high flying stocks are breaking down. They're breaking down, and they are like, you know, doing this kind of similar thing as Nvidia. High flying celebrity stocks, they are diverging from index, and this tells me that we're gonna have more pain that's coming up. And this pain is gonna come in really fast. The last time the correction only lasted for, let me see, about 76 days, 51 bars, 70 days. You see that here. 68 days. That's like less than 2 months. You can see that we could have a 2-month correction that's coming up. That's my estimate. Or even faster. Today's market is faster. Everyone has a mobile phone. Anything happens, people just click and sell, right? So the market could move much faster than what happened in 2004. Okay, so that's my biggest concern in the market, where these high flying ones, if you have bought somewhere, like if you have bought somewhere like near the top here, for the like 10-20 days you're pretty happy, but now you're basically in the red. And this is one right now. This scenario of 2004, where the index only correct a little bit, and these individual stocks have gone down by 60%, 50%, is the biggest risk in the market right now. From now, November, to end of December. So I think this scenario is very likely. So if you're buying stocks, if you're holding stock with high price to sale ratio, you definitely should have some sort of hedging strategy. Or maybe you want to reduce your position, your exposure to it, especially if you're on, you have a high leverage in your account, right? This kind of stuff is going to really destroy your account because you have high leverage. These kind of moves, looks to me, are kind of a margin call kind of base moves, because the price came down so quickly without much of a I mean, Peloton has the earning, but if you look at Zoom didn't really have an earning, right? And it's making the same move. It doesn't matter you have earning or not. BYND had an earning, but it really doesn't matter you have earning or not. It's the market sentiment has changed, has shifted. Okay? And what else? Let's see, Ethereum. Again, I think Ethereum, well, I just put the chart here, just, see if you get my point, right? Similar thing could happen to Ethereum. You get it? Okay, that's all I want to talk about today, and see you next time.